Welcome back to the Real Collective podcast, everybody. I'm Sean Tasse. As always, joined by a special guest here, Marc Morin. We'll get into Marc's info in just a second. But if you're liking what you're seeing, feel free, as always, to share it with a friend, anybody who might be interested in the stuff that we're talking about. Like and subscribe on the YouTube channel. If you'd like to schedule an appointment with me, of course, I am a professional residential realtor. You can book an appointment with the Calendly link down below. But without further ado, let's jump right into talking with Marc Morin. Marc is a good friend of mine. He owns a commercial real estate company called Koble. They've been doing it for about 20 years. He originally started this company with his partner, Graham. And Marc's just... you find those good people who have those similar sort of values and the kind of people you like to have in your corner. So if ever we've got clients who want some commercial help and we can't really serve them because it's out of our area of expertise as residential realtors, we always look to Marc for his help. So Marc, thanks for joining us. Tell us a little bit about yourself.
Thanks, Sean. It's great. Happy to be here and be connected with you. Still virtually. Hopefully we can do this in person. And thanks for accommodating. I apologize, didn't get a chance to get back to the office in time, but thanks for the mobile, the ability to do the mobile visit here.
Yeah.
Thanks for the introduction. As you mentioned, my partner Graham Webster and I started in real estate in about 2004. Neither of us, we both got licensed and went right into commercial real estate. Worked for a national firm for a number of years and dabbled in leasing. There's different parts of the commercial real estate business. Office leasing is a big part of it. We both started out doing that and then transitioned into investment real estate probably around 2007, just in time for the market to crash. And had some just really interesting experiences, character building experiences over the next couple of years. We're able to pull ourselves out of that and joined a local firm really for the mentorship and really, I'd say, starting in that 2009 timeframe, worked with some really good people, local real estate families that really helped us learn the ropes and learn a lot about our craft, really. And then in probably 2014, we spent about 18 months at where we met at Keller Williams as we were transitioning to start our own firm. We just needed a bit of a runway to do that. And so 2015 is when we launched Koble Commercial Real Estate and Brokerage. We've currently there's 6 of us on the team, myself and Graham. Jessica's been with us for almost 7 years, and then Sarah Vandenbelt, Nick Hanna, and Richard Getz. So we without going into too much detail, the basic breakdown of our business is we work almost exclusively on investment real estate, and almost all of it is commercial. We do a little bit of multi-res, but our experience really is in the commercial. And so that would be industrial, retail, office, typically some development, land development, both urban, occasionally suburban land, but really, our clients are broken into 2 categories. We deal with business owners, and this would these are business owners who rent space for their business, and they're looking to leverage the cash flow of their business to buy real estate and operate their business out of. And so that was something that we started doing probably around that 2008, 2009 timeframe, where organizations like BDC and Roynat would extend greater loan to values, so allow business owners to go in and leverage, buy buildings with higher leverage based on the cash flow of their business. And so we've helped a lot of business owners acquire real estate over those years, and Sarah really leads that division for us now. So we'll sell vacant buildings to business owners. And then the rest of the business is really investment. And sorry, the business owner side would probably range, and that would be $1 to $5 million would be the range. $1 to $7 million maybe would be the owner occupier range of purchase price. Yeah. And then on the investment side, pure investment, these are generally highly successful, highly accomplished professionals who a lot of healthcare professionals or professional real estate investors, and we typically they're buying for cash flow, right? So they're occasionally there's a value add investor, but these are individuals or families or companies that are buying as an investment, and so those would range in the, call it, 4 million to I think our largest transaction is about just over $50 million, and so. That is where our business has been growing the past number of years, and working with both largely private individuals. Occasionally, we'll work with REITs and pension fund advisors, but generally speaking, our practice is focused on private investors.
Awesome. That's
a mouthful.
Hey, well, it's good to know what your lane is. So, I think there's two groups of people who might benefit from this conversation today. Obviously, as you said, one might be that first group of people who are owner-occupied business owners, and then some people who have either built some wealth for themselves and their family over a number of years, having success in business, either as a real estate investor. We do work with a lot of real estate investors, more on the residential or multi-residential side. And also some, like I say, some professionals. So there might be some good things to do. And I think what we wanted to do is talk a little bit about the top 5 things that people need to pay attention to when they're going through the process of considering investing in commercial real estate. So the first one on that list, we'll jump right into it. The first one is for people to determine their why, right? Start with why. So tell us a little bit about that.
Simon Sinek. So we make a pretty big deal about this. So we'll have most of our business is generally, we're very fortunate that a lot of our business comes through referrals through our professional network, and often a lot of other agents as well, just because of how we really specialize. And so what we try to do is have these exploratory calls initially. What we find is that people show up saying, what are the returns? They want to talk about metrics and returns and that sort of thing. And depending on their experience, we can certainly go down that path. But if it's somebody who's a newer investor, or let's say they have a number of homes that they're rented out and they're looking at making this transition and saying, okay, I want to look at commercial, I want to explore that. We really try to, first of all, the area that we work in financially, you need to be pretty well set up, and so that will focus our conversation a little bit if they have the resources to do it. But really, we want to make sure that this is going to be the right decision for them. So there's a lot of risk involved in real estate investing, and we probably spend a lot of our time initially talking about some of those risks and what ifs. And because the last thing we want to do is work with people who are having to, not that we don't want to work with them, but we don't want somebody to be in a position where they're going to leverage up their home and put the rest of their lives at risk. Really, we're focused on these people who their lives they're in a different position, and they have cash flow and investments and equity that they can invest. And so then the next question is, well, why? Are you willing to take that risk? And what is the return you're looking for? But more than that, what we find out is, as we dig deep and we dig beyond the metrics, is that there's generally a legacy component to this. And so these are people who have built very successful careers and are maybe looking to change the pace that they're working at. They've got a very nice life. They want to continue that life, but they're going to step away from making hundreds of thousands of dollars to millions of dollars a year in their profession, and they want to set up cash flow. Basically, they want to have an investment that will provide the yield that they can live on and continue life really to getting some time back to spending the time with the people who or on the projects that they're really passionate about. And so there's that legacy piece as far as family. And then the second part of that is very often at this stage, they'll have a next generation coming along that they really want to bring into the business. The second generation, they may be wanting to create something together. And this is kind of a multi-generational wealth transfer process, right? So how can we build something that will, survive generations? And so, and at the end of the day, Sean, we really just make sure there's lots safer ways to invest and to make money. And we just want to make sure that anyone goes into this with their eyes open and doing it for the right reasons. And we understand those objectives before heading into a project.
That makes sense. And I think the second leads perfectly into the second point is about before starting a project. I think most folks will need to interview professionals. And one thing that I often say is it's a two-way street. It's a, not just you're interviewing me, but I'm interviewing you to make sure that we're going to be a good fit to work together. And I'm sure it's the same in your case, because sometimes you might come across a client who, they really want to work with you, but you might not want to take them on as a client,
Yeah, it's a great point. So we have built, and Graham was really instrumental in determining and building this perfect client experience that we've kind of laid out from start to finish. And this is often we've been able to help clients come in and they've got no experience in commercial, and we've helped them build a portfolio of 20, 30, $40 million over a period of years together. And it really has to be the right person. And not to say that we will only serve one type of client, but we need to understand back and forth. What do we require? What are the conditions of satisfaction that you have of us? And what are the conditions of satisfaction that we would have of you? And that's, for example, things like we work exclusively with our clients. If we're going to get into a relationship, an official relationship, a buyer agency relationship, we work exclusively, and we sign those contracts. And a lot of people don't work like that, and you don't have to. But it's our preference that because so little of what we do is actually on the market, we do a lot of off-market work. And so we spend a lot of our time, and the advantage that we can bring is the network we have and the work we're doing behind the scenes, often finding properties and opportunities that are not publicly for sale. And so it's important to us that there's a level of respect and understanding of what we're doing. And it could even come down to fees. Sometimes we find properties that people don't want to pay our fees, and there has to be an understanding that there's a service being provided, and we're going to do everything we can to make sure that these things work well. But we need to establish the boundaries and the ground rules of the relationship. And so we try to do that up front. Not in a pushy way, of course, but we want to make sure that they understand our process and we can walk them through what this perfect client experience looks like. And if that's not for them, that's okay. They could be a buyer. They could be just an active buyer and say, hey, put me on your list, send me stuff. I don't need you to go and hunt just for me, but when you do come across something, send it to me. And that's okay too, as long as we understand that, right? Because we're not going to provide the same level of service without that mutual commitment. And we have a lot of great clients that we work with that way as well. So one of the things that I always say though is don't just meet with us. I mean, it always helps. We talk about the triangle of trust. If you've got, if we have a mutual friend who's recommended and said, talk to Mark, talk to Graham, Nick, Sarah, Richard, there's going to be something where we're going to want to serve you as a client because we've got this mutual friend who's been good enough to put our name forward. And so we really want to do a good job there, but we might not be the only person for you. And depending on what you're looking for, I just think it's really important that you have a set of questions when you're looking to work with a real estate agent, with a professional, and you know what you're looking for, what kind of communication you're going to need, how quickly you'll be able to get back to them, how much of a priority is this project for you. So just make sure that someone can meet your needs and have those questions and ask them ahead of time.
Yeah.
And make sure they have the experience.
Yeah. Well, and again, you're doing your segues here. It's perfect. On that same note, right? It's make sure they have the experience and they can relay that experience to you, so that especially if this is your first one that you're looking at getting into the world of investing in commercial real estate, first of all, being prepared, and second of all, getting educated, learning the ropes, because I'm a smart enough guy. I know numbers. I can figure stuff out. But if you put me in front of a commercial transaction, I'm not the right person to do it. And I know that because I'm not educated in that role and in that realm. Right. So, and this is what I do full time. Right. So as a professional, it would be a professional in a different field to get educated and to understand all of the ins and outs of the commercial world. I imagine that's a process, right? It's not a okay. Well, I see this property and I'm going to go buy it. And it takes time to learn what's happening, right?
Well, and it's a great point, Sean. So these are some of the things. There's a couple residential brokerages in town that actually won't let you sell commercial. They've got a process that you're not allowed to sell commercial on your own if you don't have experience. And I always thought that was a really wise way to do it. So they almost create a mentorship process. And the reason is that there's 3,000 of us plus in the city that have the same license, right? But not all agents are equal, and you would never want me to help you buy a house, and I generally hire agents to buy and sell residential properties for me. So I think that the education, like we'll meet clients sometimes, and going through a process, it might take 5 years, which seems like a long time, but it might take 5 years of them building this education. And I always liken it to, every time I've bought a house, I've had to miss one that my wife really loved because I just wasn't there yet mentally to pay whatever the market was at. Thought I could lowball, or thought I was too smart or something. And it's caused me to lose properties. And I'm sure you see that all the time with stubborn men like me who think that they know everything. So what we talk about is take your time and go through that education process. And because if you're looking at I'm sitting in Hintonburg right now next to there's a property with about 6 commercial units on the ground floor and then multi-res upstairs. So take the time. You need to read and understand what those leases say, what you can charge back. It's very different multi-residential real estate from commercial in as far as what tenants will pay for. They could pay for a manager. They have net leases versus gross leases. And so I don't want to get technical on this, but I think that there are some complexities to commercial real estate that if you don't fully understand them, if you're not working with someone that understands them, you could really get into a lot of trouble. And it will really change because depending on who's putting a listing out, for example, if they're putting out, here's the income, here's your expenses, you need to have enough experience to know, well, is that really the expenses? And can we see evidence of that? And what are you asking for in your deliveries? And are you going through that and understanding? Are you auditing the financials? And not that it only happens in commercial, but the way the leases are written, there can be some landmines there, depending on who's written them and how. And if you're not aware, and if you're not doing your lease audits ahead of and through your due diligence, then you could end up with some really nasty surprises.
Well, yeah, and it's absolutely the same thing in the residential world. Who's the agent listing it? What is the information that they're saying? What's the information in reality when you do look at even residential leases, right? Oh, well, this is included up to a certain amount. Oh, interesting. Up to a certain. What happens beyond that amount? So there's a lot to it on the res side. So I imagine there's even more to it on the commercial side. And that again, you're doing these segues. You rewrote this script out before, but it really segues again into the fourth point, which is if you find some stuff in the due diligence that you don't love, don't ever fall in love with the place, right? Be prepared to walk away from it. That's point number 4, right?
Yeah. So one of the other things that's different in commercial is that we used to say 30 days should be a good due diligence period. Typically, we'll get a property under contract. You'll have 30 days of conditions and then another 30 day to close. That would be traditionally a standard deal. With the amount of due diligence that's required these days, and how busy everyone has been with from engineers to service providers, whether you're getting measurements taken or anything like that, we're seeing due diligence periods generally go to about between 45 to 60 days. Now, it's not uncommon. And so this is another thing when we have our intake meetings or our exploratory calls, we start to talk about this, because in a commercial transaction, you'll get a property under contract, whether it's $1 million or $10 million or $50 million, there's going to be a significant amount of due diligence that you need to do and you're going to need to pay for. And so, especially if this is your first time, and if you're on the smaller end of that scale, and maybe you're buying a building for your business, you need to be prepared to spend $10,000 to $15,000 just in that 30 to 60 day period, just to determine if this is going to be the right one. And, you know, when we say don't fall in love with it, it is a less emotional process than buying a house, but there's still a lot of emotion in these things, right? And it's typically the biggest transaction. These buildings are larger than our homes generally and more expensive, and so you need to be prepared financially to walk away to spend, you know, $10,000, $15,000, $20,000 to uncover what you need to uncover, and you need to be committed to doing it. And one of the things we always do towards the end of the transaction, before we're getting ready to waive conditions, is we kind of measure up against the initial goals and the outset. When we have that exploratory meeting, why do you want to do this, and what are your objectives, and why are your objectives these things? And we get to the end, and now we're so far down the path, and does this still meet your objectives? And, you know, we've had tough conversations with clients who generally it's very well appreciated after the fact, but sometimes it's just, there's momentum. Let's just do it. And we have to hold that mirror up to say, hey, this is what you said initially, and this no longer plays out that way, you know, because of some of the things we found out. So doesn't mean you need to walk away, but do we need to revisit the price? Do we need to revisit the seller and explore these things and just be prepared to walk away? And it could be, you know, spending that money could be, and walking away from it could be, save you, you know, many thousands more as a result.
I imagine you work with a lot of driver type personalities who are very, okay, let's go, let's get this done. What's the next? What's the next? What's the next? What's the next? And I'm sure that mirror coming back is really annoying at the time and really appreciated after the fact, because I'm like that, right? Okay, what's the next task? What's the next job? What's the next thing we're doing? Let's just continue and keep moving the train forward. We've got momentum. Let's keep going. And taking a second to look back and say, hey, wait a sec. We said we wanted to do this thing. As we've gone down this path, it looks like we're doing this whole other thing over here. That's not what you said you wanted to do, and it's not what you hired me to do. So are we?
Well, and I think that sometimes those tough conversations create the best. A little bit of tension in these conversations can create the best relationships and the most trusting relationships, right? If you're a driver, and I probably fall into that category as well, and so does Graham, and where we will charge ahead, and it's kind of the you know, the cobbler's kids with no shoes. It's you know, when I'm doing stuff on my own, I might charge ahead a little bit more aggressively than I would for a client. But you know, our clients are in the position that they're in because they're very smart. These are very successful, very intelligent people. Most often, almost always, more intelligent than us, and so it's never a challenge to their ability or intelligence. It's just, you know, leveraging almost 20 years of experience to say, hey, we've seen this before. This could happen. You know, are you sure you want to go forward? Ultimately, they make the decision, right? But we're never going to tell someone do it or don't do it. But we just want to make sure. And our relationships are generally very long-standing. They become, we've helped a number of clients build, you know, go from no commercial real estate to 20, 30, $40 million of a portfolio. And that happens because sometimes there's tension, but it's honest tension. And they know that we're, you know, we're all in this together. We're looking out for each other.
Yeah. Yeah. And that trust builds the relationship. And the fifth point here is to build your team, right? And it's not just about the realtor, it's about who else. And that's one of the reasons why I wanted to actually build the Real Collective, is to look at it, not just the realtor, but all of the other pieces that go in together. And so, I don't look at you as a competitor, even though we're both license holders. Sure. I look at you as a part of the team. I look at you as a part of, hey, here's a service that we're able to offer our clients who are looking at generational wealth building through commercial real estate. Right. So I look, you might not officially be part of the Real Collective, but I look at you as part of the Real Collective and having, being that arm for us where we're able to say, look, here's someone who I know can take care of you if that's what you're looking for. And I think point number five, building out your team is super important. Right?
I love what you're doing with your business, Sean, and we've had many talks over the years about, just your perspective. We seem to be so aligned with, how we care about people and we care about our clients, and we want to do the absolute best job that we can do and do everything we do with excellence. So I think that's it is, know what your strengths are and surround yourself with people that can balance it out. And so technically for us, there's a lot of agents that will say, oh, I know all about the planning department. I'm going to go and do a lot of the work there. And I'm going to help you determine what you can. That's not my gifting. But there are some really, really talented planners at companies and individuals in the city that can help you. And for a nominal fee to get to even sit down and have a conversation with them, it's the best money you can ever spend. And so what we've really done, and we don't have any, I would say, official partners, because every situation is different. Every property and personality is different. You know what this business is like. Personalities, there might be someone who's an excellent practitioner, but it's not going to be a good fit with this individual, right? And so, so we really try to leverage the relationships and the resources that we have to serve our clients. And so we don't do, we don't do sort of preferred partners, for example, although I think it's a great idea when it works. It's just because for different situations, there are excellent service providers. And so whether that's an accountant who understands, and we've dealt with people who have had a great accountant, but now they're getting into a different realm and maybe need a little bit different or more experience, maybe tax specialty, that sort of thing. A real estate lawyer, like a good commercial real estate lawyer who's not going to be surprised by someone who's very experienced in reading clauses and pulling out some of these little landmines that I talk about that could show up, whether it's engineers, planners, any of those people at financing. We work with mortgage brokers. We also work with lenders directly, and we don't charge for any mortgage brokering ourselves, but we do set things up for our clients and make the introductions and make sure we're very integral in that process, especially today with interest rates having gone up so significantly, like over 100 basis points in the past months and really even weeks. Financing is changing the entire story right now. It's changing the entire market. And so what are the options that are out there? We've just heard from one of the big five last week said that if you're not a client of theirs right now, they won't deal with you. They won't take on any new clients. I've never heard somebody actually say that. I've heard people say, we're not going to do real estate. We're overweight in real estate. We're not going to lend on that right now. But being connected to the market is very, very important and I think that's, sometimes some of the greatest value we can add is leveraging those relationships in a positive way to create new connections and help our clients overcome challenges and just get through the deal in the best way possible.
Well, you can't ever be an expert in anything, but having a lot of great relationships with people who are experts in everything adds a really great benefit to any of our clients, right? So yeah, as long as we know enough to be dangerous and who to ask for the real questions. Yeah, exactly. So I think this is a great point to pause real quick. We'll have a quick word from our sponsor and jump right back on through and see if there's any things that we need to sort of unpack a little bit more. As always, guys, if you're liking what you're hearing, feel free to share this with anybody who you think might benefit from this conversation. Feel free, of course, to like and subscribe on the YouTube channel. You can download us, as always, on Apple Podcasts or on Spotify. And we'll see you right after we come back.
This episode of the Real Collective podcast is brought to you by Real Collective. Real Collective brings together best-in-class real estate agents and collective experts in the field to deliver the best possible service to our clients. We govern ourselves with honesty, open-mindedness, and compassion. With diverse skill sets, our agents are able to better serve a wide array of clients, including first-time buyers, first-time sellers, transferees, estate sales, investors, and rural, vacation, and luxury properties. Authenticity and transparency are pillars of our process, which allows us to put our clients at the center of everything we do. Our years of experience and knowledge allow us to deliver prestigious service and optimal results. If you are interested in buying or selling your home, contact us today at realcollective.ca.
Welcome back, everybody. If you're liking what you're hearing, please feel free to share it, subscribe to the YouTube channel, download us on Apple, Spotify, or any of the other streaming platforms. As always, if you'd like to book a consultation with myself, feel free to click the link, the Calendly link below. And so just shifting gears a little bit, talking about buying commercial real estate. We're in the middle of technically a seller's market. So does it make sense to sell commercial real estate right now? I mean, how would that look?
Well, I think, Sean, it's there's always a reason, right? And it goes back to what we said about buying. If you want to sell your real estate, we got to have a really important conversation about why. And, I think as people who do this for a living, when somebody says, I want to sell my property, we all get really excited and think, great, that's what we do. But back to what we said before, we try to slow it down and say, why do you want to sell? And so, sorry, Sean, this is what happens when you use your phone. So what we do is sit down and say, why do you want to sell and why now? Why is that important? What are some other options that you can look at? And so, again, never trying to convince somebody that they shouldn't do something that they want to do, but we just want to make sure we walk through all the options. And so this has happened in the last month. We've had 3 meetings with clients who were either known to us or referred to us and who are in a stage of life where they've owned property for 20, 30, 40 years and in the different examples, and they're at a point of life where they don't want to deal with it anymore. And for whatever reason, whether, funding retirement, those sorts of things, they're looking to get out of the stress of management. And so one of the first things they do when they say, I want to sell, well, okay, how come? Because I want to be able to retire. Okay, well, is it possible that you could hire a manager? How are your leases written? Could you hire a manager at no cost to yourself and live off that income? Is that enough to do it? We would also go through, let's bring in the accountant, back to building that team. What are your, not only capital gains costs, but if you've depreciated this property over 20, 30 years, what are you going to, what's the recapture you're going to have to pay? What are you going to net at the end of this? So let's do all that work before we start talking about sales, and then we'll get a sense of the price thresholds and look at the comparables, and we'll do all of that. But what we want to make sure is that, okay, if selling is the right option, let's make sure we understand. Back to counting the cost, it's really all the same things in reverse that we said for buying, but let's count the cost. Let's understand what your tax burden is going to be. What are some things that you might have to fix in the property in order to make it saleable? Do you need to wait and renew some leases so that there's consistent income that someone's going to pay for? Are your leases too low right now? Do you need to wait 3 years? Can we put together a program to increase your income and then apply a cap rate at that time? Generally speaking, right now, I'd say that with the way the interest rates have been going, and with what the Bank of Canada continues to say, and all of the economists are saying, is that we're going to continue to see increasing interest rates. Historically, not always, but historically, we generally see that cap rates will follow the interest rates, and meaning that a low cap rate means a higher price. A higher cap rate would be a lower price, right? And it's just a matter of that yield. What is the differential between the two? And so, what I would say is, if you have been thinking, or if you think in the next 3 to 5 years that you're thinking about selling property, or it might be something you think about doing, I would say you should get in touch with someone right away and start to understand what those numbers will look like, because I believe we will see an impact on value, which isn't necessarily a bad thing. I mean, interest rates have been so historically low for so long now. People are getting, the ideas of value, and you can still get some of these values. We haven't seen anything blow up yet as a result of the increasing interest rates. But I have heard of some stories where because of the new metrics, the deals are no longer plausible at the prices that they were tied up at. So we may see a change going forward. Just know that you don't have to sell. There's always a list, or there's always there are always different paths that you can take. Because the worst thing you could be, the worst situation you could be in is where you feel that you're forced to sell. You don't have any options. And so we really want to explore that, whether it's through leasing, through management, through construction, whatever it is. The other thing, Sean, that we're seeing right now is, I think we've done 2 vendor take-back mortgages in 18 years. And it's becoming a conversation in almost every deal right now, just because to preserve the value. So, it's creative. This is maybe some of the more fun times. It's as you know, this last couple of years has been pretty crazy. But I think we really earn our money when we get to be creative and really solve problems for our clients, right? Putting a sign up and just and waiting for bids to roll in is wonderful, and it's great for sellers. But as the markets get more and more challenging, that's where I think we really earn our keep, and our experience and our networks and all of those things, where we can really serve clients creatively and help them accomplish whatever those objectives they had are.
Yeah, absolutely. And as like you say, as the market shifts, the people who are good at their job and able to operate creatively, the agents who are good will have success, and their clients will benefit as well. So one last thing before we jump off, we've talked twice now, both on the purchase side and on the sales side, about the reason why. Have you ever spoken with somebody and got to a point where you say, look, that's not a reason? Like, so my question, I guess, is why not? So what would be a thing that stops somebody from either investing in commercial real estate or we talked at the very beginning about, well, I don't want to take you on as a client. What are the things that make this not the right fit for somebody?
Well, I mean, I'm thinking of one example that we just went through, and we sat down with a client, and this is a couple that is looking towards retirement. They've owned their building for 30 years. It's in incredible shape, and it's a beautiful building. And we sat down with their accountant as well, and just really did map this out. And what it turned out was, if they can get a certain number, it makes sense for them to sell. Mm-hmm. And if we can't get that number, then it doesn't. And we don't make up the market, right? We have a very systematic and evidence-based approach to pricing properties, as do you. And we think we can get there, but there are some peculiarities that could cause a delay, or we get too close into the summer and people stop looking as much, and those sorts of things. So, for that example, we've got a phased approach. So let's approach it. Let's try to sell the property. We're going to get it ready. We're doing all the work ahead of time so that we can come out, provide everything to the prospective buyers. But because there's a tenancy that's coming to an end, what's really important for them is if they don't sell it, they need to maintain the cash flow. Right. So we've got a process where we're going to take it, we're going to list it for sale for a period of time. And, then after 30, 45 days, we're going to add it for lease or for sale, because the worst thing that can happen is that they get to September and they have no tenant there. Right. The preference is to sell, but it's very important that their objective is cash flow and or the equity. But we need to make that call really quickly to say, okay, we got to change courses. We're not going to sell in this time. and we need to find out what to do to help them. And so, or the other thing, Sean, would be, there's just too much of a tax burden that they can't afford to do that. So we'll work with their accountants to say, back to let's lease it up, maybe pull out some equity through a mortgage, and pull out my equity through a mortgage. And hey, there we go.
There's Iris.
Now, does Iris want to know about mortgages and what you can do to pull equity out without having to sell?
The only thing she wants to pull out is her cookie.
Yes. Well, now she's making me hungry. Anyway, I think that's a good way to wrap it up, Sean. I think that there's always a reason to sell or not to sell. It's just, let's make sure it's right for you.
Absolutely. So that's great. Yeah. Thanks, Marc, for joining me today. I really appreciate you taking the time and spending it with me. As always, if you guys are enjoying what you're hearing, feel free to share, like, subscribe. You can download us on Apple iTunes or on Spotify. Share this with anybody who you think might benefit from it. Graham, people can find you online, right? Sorry, Graham. Marc, I'm sorry.
We worked together for so long that people interchange their names all the time. It's all good.
Yeah. Best way for people to find you, is it on your website?
Yeah, Koble.ca and Koble.ca.
Excellent.
That'll be the best way.
And of course, you can schedule a private consultation with myself in the calendar link below. I think that was great. Thanks again, pal. And I thoroughly enjoyed it. I learned something new. So if there's anything else you need, Iris, do you want to say bye?
Bye.
Okay, thank you.
Bye, Iris. She is so cute.
Thanks. All right. So everybody, as always, until next time, keep it real.
Collective. Take care, Sean.
You too, pal.